its role in Kenya's socio-economic transformation, 3 recent reforms have been implemented. First, the licensing and oversight of digital credit providers to address inherent challenges, including the high cost of credit, unethical debt collection, inadequate disclosures and lack of transparency, breach of data privacy, and abuse of personal information. As at the end of March 2024, 51 digital credit providers have been licensed. Secondly, on climate change, the CBK in April 2024 issued draft Kenya Green Finance Taxonomy for public participation that will serve as a tool to classify whether particular economic activities are green or environmentally sustainable, and serve as a guide for banking sector and other market participants in making informed investment decisions or financing decisions. Third, to eliminate money laundering and vulnerability in the banking sector, the CBK has revised the anti-money laundering and combating the financing of terrorism and proliferation of financing, and a supervisory framework has been implemented so that the risk-based supervision is enacted, undertaking institutional and sectoral risk assessment and enhancing staff complement capacity for supervision. Mr. Speaker, the Kenya banking sector is exposed to dynamic global, regional, and even local developments, necessitating reforms in this respect. The following reforms are proposed. First, the Central Bank of Kenya intends to progressively increase the minimum core capital for banks from the current 1 billion to Kenya shillings 10 billion. The CBK will engage the market for an appropriate timetable to achieve this goal. This is intended to strengthen the resilience and increase the bank's capacity to finance large-scale projects while creating sufficient capital buffer to absorb and withstand shocks posed by continuous emerging risks associated with adoption of technology and innovation as institutions expand. Second, the central bank plans to amend the Banking Act to provide for stiff dissuasive penalties that are proportionate to the violations committed, support a strong compliance culture in banks, and also make sure that it aligns to international best practice. Let me turn to capital markets developments. Mr. Speaker, in order to enhance price discovery and boost income for coffee farmers, the Capital Markets Authority has licensed 14 coffee brokers, and so far, 29 auctions have been conducted under the Capital Markets Coffee Exchange Regulations 2020 at the Nairobi Coffee Exchange. In addition, the authority has approved the direct settlement system, which has been operationalized by one of the local commercial banks. Let me turn to pension reforms. Mr. Speaker, majority of Kenyans remain uncovered with the retirement benefits coverage stands at about 26%. We need to address this challenge. The Cabinet has approved the National Retirement Benefits Policy in November 2023 that requires all entities to enroll all the employees, both contractual and permanent, and pensionable, for registered retirement benefits scheme. To effectively implement the policy, we have initiated the review and harmonization of all the laws governing the retirement benefits sector. Mr. Speaker, to ensure sustainability of the public service pension system, we are revamping the public service pension administration through digitization and re-engineering of the pension management system, which is expected to be completed by December 2024. Mr. Speaker, the informal sector has about 17 million workers, and that accounts for about 83% of the total workforce in the country. This segment has remained excluded from the pension coverage, mainly due to its unique and heterogeneous needs. The National Treasury has established the Kenya National Entrepreneur Saving Trust, KNEST, to handle pensions from the informal sector and anchor the savings component of the Hustler Fund while providing a channel for voluntary savings. Let me turn to insurance reforms. Mr. Speaker, to facilitate the growth of the insurance sector, the government developed a national insurance policy. This policy is guided by the review of the Insurance Act, which has served its purpose, albeit with progressive amendments, for the last 30 years. The Insurance Professionals Bill 2024, currently under consideration by this august House, will also strengthen the standards of practice in insurance and improve stability and performance of the insurance companies. I now turn to the fiscal framework, Mr. Speaker. Mr. Speaker, the government's fiscal policy is to enhance fiscal consolidation efforts to reduce debt vulnerabilities and rebuild fiscal buffers amid significant global and even domestic challenges. These external and domestic shocks that Kenya has experienced serve as a reminder of the importance of fiscal buffers. Mr. Speaker, the focus of our fiscal policy thus remains to reduce the deficit from 5.7% of GDP in the current financial year to 3.3% in the financial year 2024-2025. We're going to do this through various means. First, domestic resource mobilization. Mr. Speaker, implementation of government's plan for rapid and inclusive socio-economic transformation largely depends on